All right, folks, I'm Roshan Karyappa. This is the Startup Operator Roundup, Roundup number 110. Yes, that's right, the 110th Roundup. And we have Gunjan Saha as well joining me on this Roundup. Gunjan, what are we going to talk about today?
Hi guys, so in this week's roundup, Roshan and I will be talking about the various corrections in valuations that's been happening for a lot of unicorn and soonicorn companies in the country. Along with that, we'll also try to understand why are a lot of startups that had based its headquarters in other countries planning to relocate back in India.
So, if you're joining us for the first time, we bring you the news and events from the Indian startup ecosystem every week. We also feature some of the best founders, operators, and investors in the Indian ecosystem. So, you can learn from all of their wisdom and experience. So, that's the Startup Operator for you. Follow and subscribe to us on your favorite platform to stay updated. All right, Gunjan, let's jump in.
Let's jump in. So, Roshan, last week we saw a lot of valuations get corrected, right? And of course, that has been the trend we have been seeing in the past few months. And this included the likes of Byju's, Swiggy, Ola, Oyo, etc. And most recently, US-based investment research firm Neuberger Berman has marked down the valuations of two Indian companies. One is fintech firm Pine Labs, and the other one, PharmEasy, which is a medtech company. And their valuation was slashed by 39 and 21.6% respectively. And it's not only this, even Oyo saw its valuation being slashed, right? And these are all companies that were planning their IPOs, I think, last year, right? And I think we all did expect that a valuation correction will take place. But what do you think? I mean, as a company, what would the sentiments be like?
Well, it's a taste of reality. A lot of the IPOs that happened in 2021, the investors had led around at some X valuation, maybe like 6 months, 7 months leading up to the IPO, and then instantly that valuation became 2x or 3x, right, in the public markets. And the IPO market is ruthless, right? I mean, the public markets anywhere imputes a sense of discipline in people. And you've seen since the market has turned that these valuations have drastically corrected, right? I mean, Paytm had listed at some bizarre valuation, right? Close to $20 billion or something. And today it's trading at $5 or $6 billion. And I've said that it's still on the higher side, right? And perhaps could correct further, even though they've done very well since, right, with their earnings and whatnot. And this is just the sobering truth of the markets, right? I mean, it never is as irrationally optimistic as it was in 2021. There isn't as much liquidity, there isn't as much, cash in the market. So this was bound to happen, and from an investor standpoint, if a particular startup was, interesting and investable at, the valuations in 2021, you must be having a feast day right now, right, with all of the slash in valuations. So they're just coming in and acquiring more of the company for cheaper at this point, and also prepping for that IPO. Whenever the IPO market returns, I don't expect it, sometime this year, maybe perhaps next year or so. Whenever PharmEasy or Oyo or the others list in the markets, it'll be an interesting time. But this was just bound to happen.
Okay, and I'm sure you're also talking to a lot of founders across the country, right? What are some of the lessons which you think the founders are like now trying to pass on to the ecosystem, or what are their biggest takeaways?
So I was speaking to a founder just last week, right? And the both of us kind of agreed that somewhere over the last 2 or 3 years, this whole business building and startups, it became very corrupted, right? I mean, we lost sense of revenue, profits especially, right, and sustainable growth and things to that effect. And it's been a lesson for us, right, that you need to focus on the fundamentals, and companies do have to turn over a dollar in profits at some point of time, right? I mean, you can't just like optimize for the next round and the round after that. So I think overall, the better founders who've been prudent all along are at a more advantageous position at this point of time because they have more optionality, right? They're more in control of their destiny. They have more runway, right? And their viewpoint has sort of won, right? Because otherwise in 2021, you could just look very stupid if you were trying to conserve cash, and if you were not trying to buy customers helter skelter, not spending shit ton of money on marketing or whatever, you would look like one of those conservative people, right? But as I said, markets don't always remain optimistic, right? The market is turned, and this is a very important lesson to always focus on the fundamentals.
This also reminds me of the scene from Silicon Valley, right? When the guy goes to raise funds and he's being offered more money than he needs. And what that means that That's just more pressure on you to reach those, forecast numbers.
Absolutely. I mean, at some point, your revenue has to justify the valuations, right? Yeah, and my favorite scene in the Silicon Valley series, the entire series, which is phenomenal, really. I mean, there's just Mike Judge is, I think, a genius. Is that part where there's this other Series A, Series B founder who is,
The meeting in
shutting
a bar,
shop,
yeah.
and he meets, Richard at the bar, and he says, "I could have taken less." You know,
Yeah, that was so surprising
so
to know
surprising,
that you
right?
can ask the investor for
Yeah,
less money.
yeah. But this is all a lesson, I always say that, this whole process of creative destruction, right? I'm not saying there are no negatives to it. Obviously, people who perhaps deserve the money more perhaps didn't get it, and those sectors and domains and spaces may be like shut off from funding for a while, right? Because of all the horror stories that happened due to the excesses. But it's a process of creative destruction. I think we will be smarter, wiser, hopefully, right, in the next cycle, and better startups will come out of this.
Okay, moving on to the next topic. A lot of Indian startups that had their headquarters abroad are now considering to shift it back to India. Now, with easy access to capital and changes in rules to make funding more accessible, and the growing maturity of India's capital markets, startups operating in India are exploring a reverse flipping or shifting domicile from abroad to back to the country. Some of the companies that have shown interest in doing so include PhonePe. They've decided to move their domicile in India after paying $1 billion in tax.
Holy shit.
Other companies such as Razorpay, Grow, and Pine Labs are also expressed interest in doing the same. Now, of course, the International Financial Services Center Authority, or the IFSCA, has set up an expert committee to identify a roadmap to encourage Indian fintech startups domiciled abroad to relocate to India, specifically to the International Financial Service Center, IFSC, in Gift City, Gujarat. So, I want to understand two things from you. One is, why did startups consider listing outside the country? And the second question is, what changed? Why is the right time for them
So
to come back now?
typically, startups would flip their domicile status to Singapore or the US to avoid the capital gains tax, right? Which would apply anytime you transferred shares and so on. So a lot of SaaS companies, a lot of consumer tech companies as well had done this in the past. In order for them to take in funding from people like Y Combinator, for example, institutions like Y Combinator, in fact, required startups to flip their domicile status, right? And you're seeing a reversal of that at this point of time, not because the taxes have ceased or something of that sort, but there are few different reasons, right? One is obviously regulation, right? Fintechs especially will be subject to all of this data localization and so on and so forth, right? And I'm sure that the regulation and compliance will apply tremendously for foreign entities a lot more than for Indian entities, right? So it makes sense for these folks to shift back. And second, I think there is also a sense that, at a time when the IPO market returns, it might be easier to raise that money from Indian investors, Indian public market investors, than, raise it from abroad, right? Because again, the Indian markets have been relatively less affected compared to the US folks, right? So companies in the past, I mean, whether it was, Make My Trip or whoever else have listed on NASDAQ earlier. I'm talking about 10, 15 years back. But the Indian IPO market is now an option for companies, right? And in fact, I would say the single biggest positive that perhaps came out of this whole 2021 boom was the fact that IPO markets was an option for Indian startups, right? So those are two reasons they're flipping back, and it's an interesting movement that you're seeing, right? And hopefully, the tax laws become a little more amenable, right? And people don't have to pay $1 billion. Maybe they could do less. What I'm hearing and what I read is that it takes anywhere between $100 to $200 million for them to do this whole flip. I'm talking about a mature startup, perhaps a unicorn, etc., which is really, really expensive. Right, so hopefully the authorities take note of this and ease the regulation and compliance on that front, because having an Indian domiciled company will be amazing for us. Yeah.
I think there's another aspect towards this is on the IPO front, right? I think a lot more people in the country have started recognizing, okay, there's a whole industry for startups itself. For example, if you were to ask this, if a startup was going IPO in India, let's say 10 years back, I don't know whether my family would be interested in investing in a company. They would have their fair share of questions and doubts. But right now, startups are part of day-to-day conversations in India.
No, startups are mainstream, right? Speaking of, I mean, I got an IPO allocation last week, thankfully, after
Congratulations, your
God
first
knows how long.
IPO allocation.
First good one, right? I mean, infamously, I did invest in LIC and lost about 30% of my cash. But yeah, I mean, mankind pharma, you know. I mean, so I perhaps owe the listeners a party at some point. I mean, people who've heard my sad story maybe one too many times,
So the
but
comment section must be flooding right now.
anyway, so yeah, I mean that's absolutely true. You know, I mean startups are mainstream. You know, the likes of Swiggy and Zomato and so on are are everywhere, tier 1, tier 2 cities, etc. So yeah, I mean it is viable. So, but I do feel that the IPO market will take time to return.